Alright, hello and welcome to Camel Finance. I'm your boy Camel, and for those of you that are interested, fishing went well yesterday, so happy days. Caught a bunch of bait, and me and my brother both took home fish to eat tonight for dinner, so happy days there. Fishing went pretty much as good as it could have possibly gone. So that's why there was no video from me yesterday. I've made a note here. I said, look, professional. What do I mean by this? I want to tackle today with as much professionalism as possible, because every time I jump on Twitter lately, I see the most emotional market I can ever recall in my entire career, right? Every time we get some small red candle, everyone has to hop out and just start assuming that the only logical thing to happen after that is the end of the world, right? And every time we get a small green candle, you get a bunch of people screaming from the top of their lungs that it's a new bull market and it's the roaring 20s. So I want to come here and say, look, let's be professionals about this, okay? This is not a game. This is business. So let's handle it like business, right? We have gotten to the point now where if you've been watching this channel for a while, you'll know that it was patience, 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 wasn't it? We were waiting for cycle lows to show up. Well, we're now very, very close to those cycle lows showing up. So that means, for me personally, it's time to get back into the market soon. Now, not only does it mean that, but like I said, let's be professional about this. It's one thing for me to tell you, I think we're about to drop into this cycle low, like my red squiggle shows, and then run to all-time highs. That's what I think is going to happen. So I'm perfectly within my right to tell you that's what I think is going to happen. That's also how I'm going to be attempting to trade this next couple of weeks or months into the end of the year, I should say. But again, keeping in with this theme of being professional about this, it's no good just saying that this is what's going to happen, is it? Because nobody knows. So what do professionals do? Well, they have a clear line in the sand. They have to define their invalidation ahead of time. We're close enough. I was putting this off because there's no point getting ahead of yourselves, right? But we're close enough now where it's time to clearly outline the strategy. It's time to clearly put the invalidation in place and say, yep, we're going to all-time highs so long as the following set of conditions is not violated. So that's what I want to do today. I'm going to run through the charts, starting with the dollar, okay? This is starting to look a little bit like we could potentially see some weakness to come in the not too distant future. It's been something we've been expecting, but it hasn't happened yet. Now, the thing that's probably going to catalyze this, or the thing that I've been suggesting will catalyze this, is a breakout in the euro dollar. So again, hasn't happened yet, but things could change and they can change quickly, right? We will also need to see the yields come off. And again, it hasn't happened yet, but these things take time. These things seem to be setting up, at least from my experience and with my current read on the market, these things seem to be setting up to see a rollover in the yields, a rollover in the dollars, the euro dollar bid, and all of this should of course catalyze the cycle lows to bounce as we've been expecting for many, many weeks now. So going back to this theme about emotionalism versus professionalism, right? This big green candle has an awful lot of people saying, ha, I told you so, okay? This is nothing to get excited about, okay? Why? Because we're still quite early in this cycle. Now, was that perhaps a day 34 cycle low? Maybe, but 80% probability tells us that it's likely going to pull back down one more time to make a day 40 low, doesn't it? So I remain patient. I remain looking for one more undercut. Do you notice how, if you've been here before, every time we get to a cycle low, I like to draw this two drives pattern, right? Where we come down, make a low, counter trend bounce, come back down again, undercut that low, and that's where we form the swing low. That's where we mark the cycle low right there, and we get long out of this swing. So every single time we get to a cycle low, I typically draw this out and I say, I wonder if this is what's going to happen. This is the most typical setup into a cycle low. So with that said, this is potentially the first drive, the counter trend bounce, looking for that second drive to undercut these lows, and then we'll get long on the swing. So far, absolutely nothing out of the ordinary. So looking forward to seeing what happens over the next coming days, particularly if we can undercut these lows one more time and then find a swing. That sets us up for a very, very nice trade, in my opinion. It's kind of the same deal for the NASDAQ. So this is undeniably a big green candle, and it could certainly follow through. If it does, then the worst case scenario is we can attack from a breakout. Again, the cycles remain down, and therefore I remain posturing, waiting for an undercut. And for the Dow, I said sideways. If we're going to go down and chop around, it's practically the same thing. So again, breakout of this, and that's where the long entry comes. Is it going to take a little bit more time to elapse whilst we find those cycle lows? Yes, probably. Either way, as you can see, things are not looking too bad. This has been the expectation. We've been patiently waiting for the cycle lows, and now here they are. So what I think is going to happen, or what anyone thinks is going to happen, is irrelevant, right? Trading is about having a plan and sticking to it. This is my plan. I am indeed sticking to it. Now, the last thing I wanted to point out is, where are we wrong about this? Once we find this cycle low, once we mark this cycle low, so assuming we roll over, undercut these lows one more time for that two drives pattern that I showed you, and then reverse and get long, wherever that cycle low forms, we must remain above that cycle low for me to remain bullish. At this point in time, after we've had this big upside rally, this big, huge move across the stock markets, followed by this big correction, if we were to then find a cycle low bounce, roll over and undercut that cycle low, then the party is over. At least from my perspective, it means that we're not going to all-time highs this year. It probably means we've got to repeat this entire fractal to the downside. That's probably how I would be posturing. That's the assumption I'm going to be making. I don't really see a realm in which we find a cycle low, fail by undercutting that cycle low, and then we shoot up to all-time highs. That's just not how cycles work. If we fail here at this point in time, then that will set us up for a weekly cycle low that forms much, much, much lower down. So to be really clear, an undercut of these lows into a cycle low in reverse, that's a long from me, and all the while that low holds, then I remain targeting all-time highs into the end of this year. However, once we find that cycle low, which is probably just going to come towards the end of this week, I would have thought, we're probably going to find it inside of the next 5 to 6 trading days. And once we find that, we must not violate that low, because if we do, I suddenly go from being the biggest bull on YouTube to one of the biggest bears very, very quickly. Much in the same way that I've been talking about Bitcoin, I said, look, above 25k and I am obligated to be bullish, but below 25k and I become very, very bearish very, very quickly. So similarly for Bitcoin, I've been patiently waiting on the sides, right? Waiting for this cycle low to show up. And I know it confuses some people. Some people have said, why don't you buy at support at 25k? Why don't you buy on the breakout? Why don't you do this? And look, there's nothing wrong with any of these strategies. But my experience in trading cycles tells me that as it stands right now, we're quite late, okay? This is day 46 of a 60-day cycle low. And something that people don't quite get is they seem to think I care about the price I get in at, right? I do not care about the price I get in at. I care about getting a core allocation down here. That's when price matters to me, okay? When I'm adding my long-term hodl stack, this is where I pay attention to price, okay? But for trades on the way, I don't care if this trade comes from up here, down here, it doesn't matter, okay? The price does not matter to me for trading. What matters is that I'm putting the odds in my favor. And the way that I do that is to say, well, right now we're on day 46 of a day 60 cycle. We know low to low is 60 days, right, on average, and we know it's going to form 60 days 80% of the time. So it doesn't matter if the price continues to go up like this, and then we drop into a cycle low and go, I'll get long out of that cycle low because one, I have a really clean area on the chart to manage my risk around. I wouldn't want to see that low violated. And two, it gives me a really, really high probability that I've got at least 40 days of upside ahead of me out of that 60-day cycle low. Similarly, I definitely don't want to be jumping in here because I know a cycle low is coming, so most probably have got to come down and retest this one more time, or at least make a higher low and go. And again, it's about putting the balance of probabilities in my favor. Out of that 60-day cycle low, I have a good area to manage the risk around, and I know I've got a full 60-day cycle ahead of me for plenty of upside space. So I still think we get a pullback. I still think we get a dip into the 60-day cycle low. Whether it comes all the way down here like I've got it marked or whether it comes higher up is kind of irrelevant. But again, as I've been saying for months and months and months, out of that cycle low, that's where we look for a swing. That's where we look to get long. And then we've got a full 60-day cycle ahead of us. So again, we're somewhere in the neighborhood of 1 to 2 weeks away from finding these cycle lows. And as we do, then it's going to be time to start paying attention. It's going to be time to start adding exposure back. And again, it's important to define where we're wrong on this. If we find a cycle low wherever we find it and make a swing, and then we come up and undercut that cycle low wherever it forms, that counts as a failed cycle. That would be very, very bearish, particularly if we go back below 25k. And then again, we have to say Bitcoin's not going to do Bitcoin things, at least not for a little while. So similarly for Bitcoin, the crypto-related equities, this is technically a breakout, okay? But do we trust breakouts on a Friday? I typically don't. And if we look at MicroStrategy, again, kind of looking like a breakout, right? Looks like a breakout, can consider adding if we get follow through in the week. Perhaps these are going to lead Bitcoin, but the Bitcoin context and the stock market context tells us that we should be expecting one more rollover. So perhaps these breakouts will turn into breakout, retest, resumption. Again, it is technically a breakout, but it's got a lot of work to do, hasn't it? It's got the horizontal and the upward sloping to recover. So not quite the type of entry I get excited about just yet. And notice how Marathon still not even into trendline resistance. So there's space across the board here. There's space to see one more rollover into those cycle lows. And the most important thing is once we find those cycle lows, we need to hold above those cycle lows to remain bullish postured. If we form those cycle lows and we come down and undercut them, then it is time to get bearish. Here's oil for anyone that's interested. Still pushing this short. Some kind of retest here and then resumption would be perfectly to be expected. And once we get that, we could even think about adding a position or moving the stop down somewhere. But one day at a time as always. So as you can see, have a plan, stick to it, right? We've had that plan, which was to wait for the cycle lows, We are sticking to it by not jumping in here, not getting excited by big green candles that are probably just going to roll over one more time. We're being professional because we're not just saying, well, I think we're going to all-time highs and I don't care about any other opinion or entertaining any other side of the argument. Instead, we know that once we find those cycle lows, they must hold. Otherwise, we have to get bearish and we have to change our posture. I'll be back on Monday as always with an update and we'll be following this. And as always, I will be showing you when I take the positions, where I put my stop losses and all of that good stuff. If you're interested in getting a few extra setups for members only, then consider joining the membership and trying it out for 1 month. And in the meantime, enjoy the rest of your weekend. Take care from me. All the best. Cheers. Bye.